Hi, I am Anna. I come from www.ntvforex.com. Euro rally stalls just a pause or is a major correction inside analysis? http ntvforex.com news ID 985383 8/18/2020 12:33:29 p.m. After getting whipsawed and then clobbered at the height of the virus fallout in March, the euro is fast becoming one of the strongest performing currencies of 2020. Europe's better handling of the coronavirus outbreak, at least when compared to America, and a big rescue package that is substantially made up of grants, have helped turn the euro's fortunes around. But as the incredible rally pauses for breath, are investors having second thoughts about the eurozone outlook amid a worrying spike in infections on the continent, or are they simply gearing up for an even steeper uptrend? NBSP a brighter outlook. The euro scaled a 27-month peak of $1.1915 on August 6, stretching its year-to-date gains versus the mighty US dollar to 6%. The multi-month highs are not just confined against the greenback. The single currency is also up versus the yen, pound, and Australian dollar on the year. But when compared to some other majors such as the Swiss franc and the Swedish krona, the euro has not fared as well. So what sets those currencies apart? After all, there can be no doubt about the improving fundamentals for the euro area economy. Despite a harsh lockdown that in turn produced a sharper contraction in economic output in the second quarter, the policy has yielded results. The eurozone recovery is now looking more sustainable than that in the United States and some other countries. More significantly, the rare show of unity by European Union leaders when they agreed to mutually raise and disperse $750 billion across member states, providing a much-needed boost to the worst virus-hit countries, has not only enhanced the region's economic prospects, but also alleviated concerns about indebtedness. NBSP yield differentials back in play, but other countries have had relative success in managing the virus too, and their economic rebounds also appear to be on track. What this means specifically is that having clearly passed well beyond the low point of the COVID-19 crisis, investors are confident that the sovereign bond yields of those countries have reached a bottom. For example, in Switzerland, the Swiss National Bank has been reluctant to cut rates any lower than they already are, with not even a once-in-a-generation global health emergency being enough to push borrowing costs deeper into negative territory. But the same can be said for the European Central Bank, which has left all three of its benchmark interest rates untouched during the pandemic and instead focused on lending programs and asset purchases to inject liquidity into the financial system. German bond yields, which by far have the largest influence on the euro exchange rate than other eurozone sovereign bond yields, have been moving sideways following the March turbulence. Yet the euro has been advancing against many of its peers. Against the yen, the move is a straightforward case of shifting risk sentiment. Although Japanese government bond yields have been more or less flat since April, the yen is a safe haven currency, and so it has been on a broad retreat as risk appetite has steadily improved. In contrast, US and UK yields brushed their lowest since March earlier this month, as investors anticipate further fiscal and monetary stimulus from both countries. NBSP tracking the recovery. However, the pound's performance against the euro is heavily distorted by Brexit, and most of its losses came from the initial virus turmoil before the latest yield differentials started to take shape. This then leaves the euro-dollar pair as the most reliable barometer for assessing the recovery, not just in the eurozone, but possibly also in the US. Just as the clouds have started to lift over Europe, the US is facing many uncertainties. The 2020 election is just over 2 months away, and President Trump is lagging behind his Democratic rival in the polls. The White House's response to the pandemic remains incoherent and chaotic, tensions with China continue to brew, and lawmakers have yet to agree on a new virus relief bill. NBSP euro longs hit a record high. No wonder therefore that euro net longs are at a record high, according to the Commodity Futures Trading Commission CFTC, while net short positions for the dollar are their highest in 9 years. This dramatic surge in specular towers along euro positions suggests the euro-dollar rally is not over by any means, although excessive positioning does increase the odds of a near-term correction. In fact, when looking at the extent to which euro longs have shot up and yield spreads between German 10-year bunds and US 10-year Treasury notes have narrowed, the euro's bull run hasn't gone far enough. The euro peaked above $1.25 in the last uptrend in 2018 when the negative yield spread was much wider and euro long positions were slightly below current levels. NBSP no denying the euro bull market technical indicators also suggest the bullish picture is firmly intact and the current consolidation phase is temporary. The moving averages remain positively sloped and both the MACD and Relative Strength Index RSI have held in their positive areas since May. The pair has even broken above its long-term downtrend that stretches all the way back to 2008. If euro bulls resume their buying frenzy, euro-dollar could soon clear the $1.19 hurdle, turning the spotlight on the $1.2090 level, which represents the 361.8% Fibonacci extension of the June down move. However, the abundance of positive indicators for the euro and the eurozone does not mean there are any dangers ahead. For one, Europe also now appears to be in the midst of a second virus wave, with infection rates rising sharply during the summer in all major countries, including France and Germany. NBSP can a second wave derail the rally if this resurgence gets much worse, especially as the colder weather begins to set in. Investors might rethink their rosy perception of the eurozone economy. It's worth pointing out that this could easily become a two-fold risk as the US is finally seeing its daily virus numbers come down, hence, the dollar pessimism may not last very long. As for Europe, should the virus get out of hand again, governments might be compelled to take tougher measures than the mild tightening of restrictions they have been enforcing so far. In the worst-case scenario where fresh business shutdowns have to be reimposed, and this comes in conjunction with the US Congress approving a new round of fiscal stimulus, the euro rally could suffer a severe setback. A heavy sell-off could knock euro-dollar back down to $1.1580, the 161.8% Fibonacci extension while lower down, the 50-day moving average near $1.1480 would be a major target for the bears. NBSP fear the ECB. One important thing to bear in mind, even if the optimism for the European recovery was to fade somewhat, is that Europe doesn't need to outperform the US on a grand scale to justify the euro's uptrend. After the Federal Reserve slashed rates to near zero, wiping out the dollar's yield advantage, the eurozone only needs to do slightly better than America on the growth front for the single currency to enjoy a long-awaited bullish status. Indeed, what investors should probably be more worried about than rising virus cases is rising eyebrows at the European Central Bank as the euro fast approaches $1.20. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.